Do you know that Tesla's new partnership is believed to be a game changer? Tesla investors and enthusiasts are more than ready to hear good news come their way, and this could be one of them. Although Tesla encountered and went through numerous roadblocks in the past year, hitting record lows, the leading EV company stopped at nothing in the name of innovation. You definitely would not want to miss this. In a January 3rd press release, Piedmont Lithium announced, Piedmont or the company, a leading global developer of lithium resources critical to the U.S. electric vehicle EV supply chain, today announced that it has amended its agreement with Tesla Inc., Tesla, to supply the U.S. automaker with spodumene concentrate, SC6, from North American Lithium, NAL. The said press release further stated that Piedmont and Tesla have mutually agreed to amend their previous offtake agreement with the terms of a new agreement, which are binding for a 3-year term and include an option to renew for another 3 years. Under the amended agreement, Piedmont has agreed to deliver approximately 125,000 metric tons of SC6 to Tesla beginning in H2 2023 through the end of 2025. According to the new terms, the SC6 pricing will be determined by a formula-based mechanism linked to average market prices for lithium hydroxide monohydrate throughout the term of the agreement. The pricing received by Piedmont under the agreement with Tesla will be determined by market prices at the time of each shipment. We are pleased to be able to partner with Tesla to supply lithium resources produced in North America, said Piedmont Lithium President and CEO Keith Phillips. The electric vehicle and critical battery materials landscape has changed significantly since 2020, and this agreement reflects the importance of and growing demand for a North American lithium supply chain. This agreement helps to ensure that these critical resources from Quebec remain in North America and support the mission of the Inflation Reduction Act to bolster the U.S. supply chain, the clean energy economy, and global decarbonization. Spodumene concentrate production is expected to restart at NAL in H1 2023, with the first commercial shipments expected to begin in Q3 2023. Piedmont plans to deliver SC6 to Tesla from NAL under Piedmont's offtake agreement with Sayona, Quebec, which entitles Piedmont to purchase the greater of 113,000 metric tons per year, or 50% of SC6 production. Piedmont's purchase of SC6 from Sayona, Quebec are subject to floor and ceiling prices for the life of mine term. It can be noted that in late September 2020, Piedmont Lithium Limited also announced that it has entered into a binding agreement with Tesla Inc. for the supply of spodumene concentrate SC6 from Piedmont's North Carolina deposit to Tesla. The said agreement said that it is for an initial 5-year term on a fixed-price binding purchase commitment from the delivery of the first product and may be extended by mutual agreement for a second 5-year term. The agreement covers a fixed commitment representing approximately 1/3 of Piedmont's planned SC6 production of 160,000 tons per annum for the initial 5-year term, as well as an additional quantity to be delivered at Tesla's option. The SC6 sales are expected to generate between 10 to 20% of Piedmont's total revenues from its proposed integrated mine-to-hydroxide project for the initial 5-year term. The agreement is conditional upon Tesla and Piedmont agreeing to a start date for spodumene concentrate deliveries between July 2022 and July 2023 based on the development schedules of both parties. The said agreement in September was then agreed upon to be amended by both Tesla and Piedmont in early January 2023. Shares of Piedmont jumped 8% in pre-market trading to $47.50 after the company announced the amended deal. In order to help accelerate the transition to electric transportation, Tesla has become increasingly involved in the raw material supply chain for battery cells. Despite only now starting the production of its own cells last year, the automaker has been securing the supply of lithium, nickel, cobalt, and other minerals for its battery cell suppliers for years. More recently, Tesla started to not only deal with established mining companies, but also started to sign contracts for offtake agreements with junior mining companies looking to build new mining projects that would increase the supply of some critical resources for batteries. This strategy helps those companies raise money to build their mining projects. Piedmont Lithium is one of those mining companies. The change in the supply agreement between the miner and the car maker, also based in the U.S., is in line with the shift seen in recent years. The lithium market has historically been dominated by long-term contracts based on a fixed price negotiated between seller and buyer. But the uptrend in prices over recent years, alongside the unpredictability of future lithium prices, has prompted a shift along the lithium value chain to a pricing mechanism based on more transparent and up-to-date supply-demand dynamics. Simply, Piedmont Lithium will now supply Tesla with an increased volume of 125,000 tons of SC6, a high-purity spodumene concentrate suitable for lithium-ion batteries, from the second half of this year until the end of 2025. According to the updated terms of the agreement, the SC6 pricing will be determined by a formula-based mechanism linked to average market prices for lithium hydroxide monohydrate throughout the term of the agreement, Piedmont Lithium said. The pricing received by Piedmont under the agreement with Tesla will be determined by market prices at the time of each shipment, it added. Minerals for Tesla will now be sourced from Sayona Mining's North American Lithium project in Quebec, Canada. It was originally to come from Piedmont's North Carolina project, but that is still in the pre-permitting stage. Spodumene is a hard rock mineral that contains lithium and is a key input for the production of lithium-ion batteries for EVs. The uptrend in spodumene prices has been tracking the surge in downstream lithium chemical prices since 2021. The ultralight metal has entered a new bullish cycle, supported by high demand for EV batteries. This supported a price uptrend across the whole lithium industry, including technical grades, battery grades, and spodumene concentrate feedstock. But these gains seem to have slowed in recent months. Chinese lithium prices have been on a downward trend since the beginning of December 2022. Given that China's EV production slowed during November last year, the demand for upstream lithium salts has also cooled, market participants said. Fast Market's fortnightly price assessment for spodumene minimum 6% Li2O spot price CIF China was $8,000 to $8,299 per ton on December 22nd, down by 1.67% from 2 weeks earlier, but up by 225.98% from $2,400 to $2,600 per ton on January 6, 2022. The electric vehicle market has enjoyed a big rise over the last decade as the push towards sustainability influences the cars people drive. From 120,000 EVs sold in 2011, the number jumped to 6.6 million in 2021, representing 10% of the total car sales, according to data from International Energy Agency (IEA). In 2022, 4.3 million new EVs were sold during the first half year, a 62% increase compared to 2021, according to EV volumes. Tesla is arguably the undisputed leader among the biggest electric car companies in terms of market cap and sales. During the first 3 quarters of 2022, the company headed by Elon Musk generated total revenues of $57.14 billion, $50.17 billion of which came from the sale of its vehicles. As Tesla faced a lot of headwinds in the past year, which led to record low numbers, the media has been saying that Tesla is no longer the world's largest electric car producer. However, some say that this stems from adding plug-in hybrids into the mix, while everyone agrees that all electric vehicles are the future of the industry. For years, Tesla has been investing heavily in large-scale production of electric vehicles, while most legacy automakers were still focusing on compliance vehicles and building just enough of them to comply with government regulations. Furthermore, Tesla continues to pursue an aggressive production program, looking to increase the output at existing factories in Fremont, California and Shanghai. However, the biggest production boost is likely to come from 2 newer gigafactories, meaning giant factories in Berlin and Austin, Texas, which are believed to be still in the ramp-up phase. On top of soaring deliveries, Tesla is now producing profits without relying on the sale of regulatory credits. Net income topped $5.5 billion in 2021, up from just $721 million in 2020. Less than 1/3 of its profit came from regulatory credits. The company's strong results have continued in 2022, with the company highlighting record revenues, operating profit, and free cash flow in the third quarter of the year. Of course, it is also worth noting that Tesla stock has been in a downward trend for most of 2022. But still, only in the last few years have automakers admitted that all-electric vehicles are the future of the industry and started to heavily invest in producing them in large volumes. It resulted in Tesla building a massive lead in EV volume production that it still maintains today. And Tesla's seemingly endless innovations in the EV space and energy storage make the distance between its competitors even greater. Subscribe to Tesla stock for more.